Hello. Good day, everyone. How's everyone doing? We hope that you are well. We trust that you are good. Welcome to another episode. Welcome to Uncensored _ the truth about money. Thank you so much for joining us. We truly appreciate it. So I'm your host, Kyajunior Masango, and I'm with our untitled speaker or our untitled residential guest.
Yeah.
Madlala. Pratamza, how you doing?
Good on yourself, brother.
I'm good.
Sure.
Good to see you, man.
I know.
Ngiyabona ngiyabanda phuma ama jacket.
Aye. Sami flu.
Namaphona ne.
Aye, sami flu ndoda.
Coronavirus.
Hayi ingenile yaphuma asana ndaba ne corona.
How's it?
No good, man, all good.
Sharp. So I want us to talk about interest rates, right? Solely because I think within a short space of like a year, it has been increased twice. And obviously, just shortly after that, when listening to the news or just listening to the radio, you hear a lot of people just calling in and complaining about this, right? That people, their bonds have just like their the payback rate is just like on another level. It's insane, and they are struggling to pay their bond or whatever loan that they have. And this is something that we touched on a little bit when we were talking about home loans. And I just felt the need for us to like go deeper, dive in a little bit deeper, and understand exactly what is an interest rate and what's the best interest rate out there, or what causes it to increase or decrease, and why has it increased twice within just the space of a year. So that's the, as they say in politics, that's the topic I'm putting on the table. Comrades.
Yeah.
So interest rates. So it says here in my research, right, that in the most recent monetary policy committee meeting, the central bank decided to only increase short-term interest rates by 25 basis points, which may be seen as a signal that the hiking cycle is reaching an end.
Short-term basically means that it's not going to be something that's for long. So remember with COVID. So COVID, a lot of people lost their jobs. Economy was at the verge of a standstill. Where in our houses we couldn't go to the shopping centers. Some people couldn't go to the bars. It was just So the economy was affected a lot. Ne?
Sure.
So the Reserve Bank decided to decrease interest rates. So the reason why they decided to decrease interest rates is so that people can start spending, right? So that they can start buying. So because if interest rates were still at the same point that it was during COVID, the country could have been in a worse off situation. People would have even lost more stuff. So sorry, and I think at that point, like the interest rates as a Reserve Bank was sitting like 4-point-something%, like very low, very, very low. And people were buying houses. I think we covered in one of the episodes is the home loans, where like Standard Bank released stats where they were saying that, it's at the record highest where people are applying and they're getting accepted to buy a house. And so, but now COVID ends, right? Markets are opening. But then we need to balance things out now, right? So it's like people forgot where interest rates were before COVID. We got so used to the nice interest rates where you can buy anything, you can buy a car, buy a house, and still have savings, So the Reserve Bank was like, okay, guys, hang on. Businesses still need to make money now, and so they increased the repo rate. So yeah, so the reason why they're saying that the hike is about to end is because now it seems like everything is getting at an equilibrium. So it seems like everything is getting to an equilibrium where how can I play? Supply meets demand, and the economy is rebounding again. Where the GDP is increasing on a yearly basis. So that's why they're saying they're increasing the short term repo rate. I think it's 25 basis points, which equates to. Well, I also didn't know this before, because you always hear on the news, yeah, interest rates have risen by 75 basis points, and you're like, what's basis points? So 100 basis points is 1%. 25 basis points is 0.25%. 50 basis points is 0.5%. So that's how basically they score it. But yeah, just so that we put it, in layman's terms. So yeah, hence I say they've increased it by 25 basis points. So, but it means that we're almost at the point where we're not gonna receive more interest rate hikes. The committee is meeting up again. I think they say they meet up, I think like 6 times a year. Okay. Yeah, they meet up 6 times a year to discuss all of these. So there is talks, although it's not confirmed, that there might be another hike. We don't know yet. Those are gone.
Already
yeah, no, it's crazy, man. But the thing is, that's why we had said, it's like people must share these things with other people, because I remember when you covered home loans, we were saying that if you pay for, let's say your bond is 5,000 rand, put a bit extra into it. Sure, like 1,000 rand, 1,005. Yes, it'll go into that excess bond, but in such cases, like these ones here, even if the interest rate goes up, at least it won't reach that point where your bond now is more than what you were putting. Because you're putting more, you've gotten used to that. You've budgeted according to that excess you've put, so things are a bit better. So yeah, people must go and subscribe and share.
So I'm taking you way back here, probably high school or even grade 7. Mm-hmm. Is there a difference between interest rate, repo rate, and the prime lending rate?
So interest rates, repo rates, and the prime lending rate. So the repo rate. So okay, let's put it this way, right? There's the central banks, ne? So the central banks are the ones that determine the repo rate.
Okay.
Ne? So repo rate is like repurchase rate. Ne? So so let's say we'll use round figures. So they'll set it at 5%. Mm-hmm. But that's at 5%. They're borrowing money to who? To the central. I mean to the local banks. Sure. Your Standard Bank, Capitec, FNB, right? Mm-hmm. So at 5%, they're lending through to them, and then we have the prime lending rate, ne? So which is the interest rate at which banks then borrow from one another, or they charge you. So they'll put another 3% and say, Junior, the prime lending rate is 8%. So basically that's the difference. So the repo rate is set by the Reserve Bank, and the prime lending rate is set by our local banks, which then gets charged to you. So when the Reserve Bank increases its lending by, let's say, 25%, or the repo rate goes up by, let's say, 25 basis points, that increases your loans. It increases your car financing, home loans, but it also impacts good on your savings as well. So basically that's, just to answer your question, before we jump the gun, that's what it is. Yeah.
So now why, so I don't know if you can explain it any further, but then why the need to hike the interest rates?
Yeah. So the reason why, like as I was saying earlier on, the reason why they hike interest rates is so that it can balance out with inflation, right? Because inflation, so the South African Reserve Bank also determines inflation. Ne?
Okay.
So it's like buying power. Inflation is literally buying power. So if I bought a can of Coke 2 years ago for 10 rand, today it's worth what? Let's say 15 rand, for example, right? But now if I'm buying it at 15 rand and the interest rates haven't went up as yet, right? It means that, so okay, let me put it this way. If it's still at 15 rand, I'm not gonna buy, ne? Because it's at 15 rand now. But now, if interest rates go down, it means I've got more money in my pocket. So I can afford that Coke now. So interest rates basically get regulated so that the buying power of, or the inflation, let's put it this way. So interest rates, they go up and down to match inflation so that, the economy can still be stable. Yeah.
And then just on that point, what is inflation?
So inflation is, in another term, it's the general increases in all prices of goods. So essentially what that means is it's basically the buying power of let's say 10 rand or 100 rand. So if the buying power of 10 rand goes down, it means the interest rate is going up. So hence we say, when inflation rises, just make sure that the economy is keeping up with inflation as well. Because as we said earlier on, if I bought Coke 2 years ago for 10 rand and today it's 15 rand, but I'm like, okay, why is it 15 rand? I'm not going to buy if situations are still the same, But if I know I've got more buying power because the interest rates have went down, I can now afford that Coke. You know what I'm saying? So inflation is just, it's kind of, who's that other guy? Nota. It's Nota, ne? Yeah, the guy who said I was the first man on the moon for Neil Armstrong.
Sounds like not.
So he said he made some sense. So he said inflation is like having a hole in your pocket, and the more it rises, the bigger that hole. So the higher the inflation, the bigger that hole it is, in your pocket. So the less money you have on your side if inflation rises,
So now what causes that hole to grow bigger? So what causes the inflation? So what determines the inflation to increase?
All right. So basically what causes inflation to rise and fall? So it's three factors. So it's the demand side inflation, the supply side inflation, and then expectations, as I said. So when consumers, on the demand side, so when consumers spend more money, prices tend to rise faster. So when there's a demand, like for example, now there's a demand for inverters, solar panels, and so forth. So they'll start charging more for those, right? So that also contributes to inflation, right? And then on the supply side, so inflation tends to decrease if it becomes cheaper to produce a service or a good. We look at like China. So in China, the cost of producing, let's say, a gene is very low, so that also manipulates inflation as well, okay? And then expectation. So with expectation, it's like, okay, South Africa has won the bid to host the 2010 World Cup. So it means tourism is going to go up. We're going to receive more foreign currency, this and that and that. So what that means is that, okay, let's increase the inflation rate, so that people can spend more in South Africa, or can basically the value of South Africa can have more. You know what I'm saying? So basically those are the three, determining factors is the inflation.
So with obviously like now, right, we're in a situation where okay, but then do you still remember what the inflation rate was before COVID, before they decreased it to 4 point something?
So they always try to keep it within. So the Reserve Bank always has a target for inflation, before we get into interest rates. So they always have a target to keep inflation between 3 and 6%. Okay. So with your interest rates, I think they were also sitting around, I think it was at 10, if not 9%. So before COVID.
Okay.
They also were at 10, 9%. So hence I say, we're just going back. The Reserve Bank is slowly easing, the economy back to how it was pre-COVID.
But it doesn't feel like it though. Like it
It
feels
won't
like
feel-
no, it feels like we're in a worse off situation now than
Yeah.
pre-COVID. You know what I'm saying?
Yeah.
It doesn't feel like it.
No,
you
it's
know?
because again we got so used to the situations in COVID, and things were so reasonable and so forth.
But
you
that
know?
was like for how many years? 2-3 years at most.
2-3 years, yeah. We got so used to that because there's so many things that happened within that short space of time that now when you're starting to ease things up and get back to how things were, to normalize things, then it's like no, this is too much. But this is where we were before COVID.
Yeah.
This is where we were before COVID.
That's crazy.
Yeah.
So what will higher interest rate mean for savings, loans, credit cards, and store credit?
So basically what it means is that higher interest rates mean that your spending power is less. So because the reason why I say spending power is the amount of money you have in your pocket. So if you've got a car that's being financed, if you've got a bond, right? If you've got credit cards, if you've got revolving credit, you've got a personal loan. So as soon as the interest rate goes up, right, the premiums that you pay on all of these facilities, they also go up as well. So basically means that now you've got less money in your pocket now. So you can't afford to do the things that you used to do before, right? Contrary to that, if you've got savings and investments, so when the interest rate goes up,
Sure.
those also go up as well. Interest rates and those items go up as well.
Sure.
So it's yeah. So it depends on which side you are on. So you can make more money when the interest rate goes up, or you can lose more money when interest rate goes up.
So you're at a much more better position when you have investments in
Yeah,
place.
100%.
So that means more money on more money coming to you in terms of like your investment and your savings
Yeah.
growing.
Yeah.
And then who sets the interest rate?
All right. So before we
Sure.
so what was the interest rate before COVID? Ne?
Yeah.
Interest rate in South Africa was averaging at 11.9% from 1999 to 2003. Yeah. So it was at 11.9% before COVID. Ne?
11.9%.
Yeah, pre-COVID. Ne? It was averaging 11.9%.
Yeah.
And at its all-time lowest during COVID, it was
Yes.
at 3.5%. So that's how nice things were. 3.5%
I see.
in July of 2020.
Oh, but the way like that's what I'm saying. Like with like I don't know, because the way people are complaining about the hikes, it's as if even pre-COVID it was low compared to where we are now. Obviously, I am mindful of the fact that if, for example, you purchased property or a vehicle
Yeah.
during COVID,
Yeah.
then now that everything is going back to normal, then obviously that increase must shock you.
Yeah.
But if you had owned your house before COVID, chances are you were paying close to what you are paying now.
Yeah,
You know what I'm saying?
100%.
So I don't know why like the hoo-ha, like
No, we like complaining, but also the complaining comes from a lack of information. So if, for example, they said interest rates are going up at, let's say, 25 basis points, for example, ne?
yeah.
But we are still better off than how we were pre-COVID. Then people are like, oh, okay, no, it's not so bad. Because we tend to forget very easily.
Yeah.
Forget. So hence I say, it's just the lack of information that makes us a bit more nervous to say, okay, yes, it's going up. I know everything is going up. I know, plus load shedding, plus petrol, plus this, But it's you still at a better position now than how you were before COVID.
Yeah.
So we're still fine. We're still fine.
But fuel is not fine though.
Yeah.
There we are not fine. But then that's okay, cool. Then obviously then we know, right, that the hikes in fuel prices also causes other things to for example, food,
Yeah.
or any other thing to increase as well. So I guess maybe that's where the panic is coming from. Because now when you go to buy, let's say, if you have 1,000 rands and what you used to get
Yeah.
2 years, 3 years back for 1,000 rands, it's much more lesser now. The groceries are much more smaller now compared to 2-3 years.
Yeah.
So I guess maybe that's where the panic is coming from, or the complaining is coming from.
Yeah, hence I say it's we like for interesting study. So if you had a bond, COVID, ne? July 2020, like when COVID was at its, when the interest rates were its all-time lowest, ne? So you'd be paying, let's say, 11,000 rand for your bond, ne? Sorry, now, same house, same bond, you'd be paying close to 20,000 rand for the same house. Asgafagi moto, your salary hasn't went up, or maybe it's gone up by 6% to cover inflation. But that's how things are. Like there's people who are saying it's getting tough. Like we bought cars when things were still fine, but now it's rough. Like it's bad. Our salary is still the same. And obviously then during COVID times, we can afford this, we can afford that. We got a proof for this, we got a proof for that. So now it's like, we can't take these things back. We can't sell them now. We can't. So there's a lot of repositions that are going to happen going further,
It's crazy how much damage 2 years can do when it comes to the economy.
Yeah.
Just 2 years.
Yeah. No, it's crazy. We're still recovering. We still haven't recovered from what happened in COVID, and obviously load shedding and all these things, they're not making it any better. However, there's light at the end of the tunnel. Not at the beginning.
They must put the light inside the tunnel. So who sets how much time do we have left? 7 minutes. So who sets the interest rate?
So interest rate is set by the Reserve Bank, but within the Reserve Bank there's the Monetary Policy Committee. Yeah.
So what is the monetary policy?
So monetary policy, they basically achieve and try and maintain stability within the economic growth within South Africa. Okay. So they are there to say, all right, where are we, economic-wise? Is South Africa making money? Is it losing money? Are consumers, are getting strained? Will consumers, benefit? So they make all of these decisions and then say, okay, let's raise it. Because at the end of the day, South Africa is a business, so you still have to make money, for the country. Yeah.
How often does the interest rate increase?
So interest rates can increase according to them. So as I said earlier on, these guys they meet 6 times a year. So they can decide at that point to say, all right, after all of the research, after all of the calculations and so forth, to say that, okay, interest rate is increasing by 10%, by 10 basis points, by 50 basis points. So it's not to say that interest rates, will increase every time they meet or they will drop every time they meet. It's based upon the outcomes of that meeting. And as I said earlier on, there's talks that it might increase again. It can increase, however, we're still better off than how we were pre-COVID. I get it now, we must release proper information. So you can't just say, it's going to increase. It's going to increase, but we're still better off.
Is that now the forecast for 2023?
Yeah. So they're still going to meet up this year again.
We don't know whether they're going to increase it or not.
Yeah.
What do you think? Do you feel like...
Yeah, they're still going to increase it. They're still going
to go back to where we were before COVID.
Yeah, but the thing is another thing as well is that they increase it gradually so that it's not a shock to the system. Obviously, when everything increases, you cry. But they're trying to basically also go back to the point where the economy was also making money. You know what I'm saying? So my thing is that we're still going to get some more interest rate hikes. But they're still better off than pre-COVID.
You're not helping the situation. You're not helping at all.
It's business. It's not personal.
South Africa wants hope. They want to hear good news, bruh.
No, there's good news, bruh. There's good news. What's the good news? I must read more good news. I must put more good news.
We must have a news segment here where we just
Yeah.
broadcast or talk about positive news.
The good news corner. Yeah. Yeah, we'll do that. I mean, like, but yeah, people are still making money. Yes, businesses are losing money because of some businesses, especially large, big businesses, they're still losing money with regards to load shedding. But there's people who are making money from this whole load shedding thing. Like, look at the rise of companies that are installing inverters and solar panels. So wherever there's negativity, people are thriving from that as well. Like with with COVID, people used to sell PPEs and umhlonyane and all these things, So there's always, is your cup half full or half empty?
So now, just like obviously, like just off topic. So what causes fuel hikes? Is that part of the interest rate increasing, or is that a different ball game altogether?
Yeah, it's a different ball altogether, but interest rates also form part of it. But I get it there. There's like within petrol, you pay obviously tax. South Africa, you pay for the road accident fund. It's the dollar rand exchange. So wherever we're buying the oil from, if they decide to increase, the dollar, then petrol costs a bit more. So there's a lot of factors that go into petrol. Maybe it's a topic maybe we can cover. Oil and petrol, I don't know. But yeah, so it's a whole ball of factors that come in together to basically increase it.
So it has increased the way it has now. Is it because of an issue of supply? Are we finding it hard to get it wherever we are getting it from?
So it's that, as well as the war in Ukraine. It's the limitation of oil within the world. There's certain countries that are saying that we will only release so many barrels of oil, because obviously if we decrease demand, if we decrease supply, the prices shoot up because it's scarce, right? So that's what it basically means. Also, the rand power as well. It doesn't help that the rand is weakened to the dollar. So if the rand could also strengthen, like if we were sitting at 10 rand to the dollar, petrol would be nice, man. So inflation also plays a huge role also with the petrol hikes as well. So hence I say, there's a lot of stuff that factors into it. If the government says we are increasing the contributions for road accident fund, petrol goes up as well, because that's where they make their money. You know what I'm saying? So yeah, man, it's a whole magnitude of stuff that go into it. But I don't even look at the price anymore, bro. The thing is, petrol everywhere in the world is expensive. So it's not just like in South Africa. So like you watch news in America, they'll tell you that it's at its all-time highest. You go to Australia, it's at its all-time highest. You go to wherever you go, like petrol is expensive because of this world crisis that we are in. But now the thing is, if it's like what you were saying earlier on. It's not the collection of money that's the problem. It's the management of that money that's the problem. Because within those levies, there's a road accident fund, there's the maintaining of the roads, So if we tighten the taps on one of those taxes or levies, there's a certain industry that's going to feel the pinch, So hence I say, like how you put it nicely, to say that yes, they're collecting all of these levies, and it'd be nice if we saw the fruits of all of these levies. Said, all the roads, no potholes. This is fine. People with a road accident, those guys, it's well managed. This is fine. There's no corruption here. Then you don't mind paying taxes if everything is well run. You know what I'm saying? Definitely. Like they always say, Cape Town is expensive, but people who live in Cape Town say, I'd rather pay all of these funds and live in a clean, functioning, city. So hence I say, it's not about, like as you say, it's not the collection of the money, but it's the utilization of these funds and where they are going to. Yeah. Don't be sad, man. Don't look sad.
No, I'm just thinking. I'm thinking.
Hey, I know it's interesting times, bro. We live
in interesting
Yeah.
times. But Tamza, thank you so much, man. This was really helpful.
Likewise.
Thank you so much for watching, guys. We truly appreciate it. Don't forget, we are available on Instagram. We go by the name uncensored_the truth about money, as well as TikTok. On TikTok, we are uncensored_financial edu, right? And also, this podcast is available as audio on Google Podcast, Spotify, as well as Apple Podcasts. So don't forget to also check us out on those platforms, right? And please don't forget to like, share, and subscribe. A lot of you guys that are watching us from social media are not subscribed to our YouTube channel. So please do subscribe. We truly appreciate it. With that being said, thank you so much. We truly appreciate it. Cheers.